Good morning and welcome to Position Sizing, my take on the markets. It's Sunday, November 14, 2010, and before we begin, I caution you again to invest at your own risk. I don't share in your profits, so I don't share in your losses. Today I want to talk about the rules for constructing money flow tees. For more information generally on money flow tees, please see the video I made on October the 13th. To construct any tee, you need to know two things: where to put the center post and where to start the tee. This video will discuss where to place the center post. Money flow tees are defined by divergence between the money flow and price. So here's the first rule in where to put the center post. When you're attempting to project the end of a trend, place the center post where the divergence which defines the pattern as a money flow tee begins. Ordinarily, this is clear. We're looking now at a chart of the S&P from back in early 2010, and you can see that the money flow made a very clear peak on March the 17th. And that is the only place that you can put a center post on this chart. Sometimes, however, the money flow index is not so clear. Let's go now to a chart of the S&P from early 2001 showing an inverse money flow tee where we're attempting to project a bottom. Here the money flow index bottomed in late February and then went flat for a couple of days and then started to rise as price continued to fall, giving you the divergence that defines this as a money flow tee. So the rule is put the center post at the end of the flat pattern because that's where the divergence started. Turning now to an example at the end of 2001 in the S&P, here we can see the money flow made a double top in November before starting to trail off as prices continue to rise. To forecast the end of the trend, you must place the center post at the second top where the divergence that defines this as a money flow tee actually starts. If a money flow tee is to accurately project the end of a trend, then by definition there can only be one correct start date and one correct center post. However, sometimes you'll get a complex topping pattern in the money flow index which will allow you to project an interim top date. And so that brings us to the second rule in placing the center post. When you do have a complex topping pattern in the money flow index, you have the chance to project an interim resistance date, but not the end of the trend, by splitting the topping pattern. Here we're looking at a chart of silver from this fall. Note how the money flow index becomes severely overbought and stays overbought for a little over 3 weeks. If we place the center post in the middle of the topping pattern, we do get the accurate forecast for an interim resistance date the week of October 11th. Most of the time you're not going to find a complex topping pattern in the money flow index, and there will be no question about where to place your center post, but I wanted to make a video to show you some examples of the exceptions to the rule. That's it for this lesson. Next time we'll discuss where to start the money flow tee. Until then, happy trading.